All right, let's talk about what's going on. We've got a perfect storm brewing in the markets right now, a ton of uncertainty. So we're going to break down exactly what's hitting investors. Let's get right into it. So let's just dive right in. The whole market, it feels like it's holding its breath, like it's right on a knife's edge. Every single piece of news, especially bad news, is just triggering these huge, sharp reactions. We had a little bit of optimism, sure, but the second things start to look even a little bit cloudy, boom, the sell-off kicks in. But why? I mean, what's creating this perfect storm of anxiety? Well, that's what we're here to unpack. We're going to look at the three big pressures that are really shaking up investor confidence. And trust me, it all kicks off with a political mess happening over in Washington. All right, first up, the shutdown. This thing is casting a huge, long shadow over everything. It's kind of the foundation for all the anxiety we're seeing. And you have to remember, this is the backdrop for every other piece of economic news that comes out. For a second there, it really felt like we might see a deal. There was this little glimmer of hope, and then, nope, it all went south pretty fast. Hopes for any kind of agreement are just fading. Why? Well, it came down to comments from House Speaker Mike Johnson. He basically confirmed he wouldn't hold a key vote, and that was it. That was the signal the market needed to hear that this deadlock, it's not going anywhere anytime soon. And this is where it gets really telling. You can literally see the market's confidence just evaporate. I mean, look at this. According to the betting markets on Polymarket, the odds of the government reopening by November 15th were sitting at a pretty hopeful 75%. Then the news hits and bam! Overnight, those odds just tanked, falling way below 50%. A total collapse in sentiment. So, as if the political drama wasn't enough for the markets to deal with, a massive bombshell just dropped on the U.S. economy. And this one hit a real nerve. Yeah, we're talking about a real shock to the system here. This wasn't just some minor blip. We got new data from Challenger Gray Christmas, and it showed a really sudden, really dramatic weakening in the labor market. Honestly, it caught a lot of people completely off guard. So get this, 153,000. That's the number. That's how many job cuts U.S. companies announced just last month. And just to put that into perspective for you, that is a huge wave of layoffs. It's almost 3 times higher than what we saw in the same month last year. This brings the total for the year to over 1 million. We haven't seen an October this bad for job cuts in 2 decades. 2 decades! Okay, so you've got political chaos, you've got cracks in the job market. The foundations are definitely shaking. So where are investors running to hide? Where are they seeking shelter? That's the big question, right? Is the money flowing into classic safe havens like gold, or is it going to the new kid on the block, Bitcoin? Well, if you look at the institutional investor sentiment, a pretty clear picture started to form. A macro strategist over at Bloomberg pointed out that big money, institutional funds, were piling into gold ETFs. At the exact same time, they were pulling their money out of Bitcoin ETFs. You can see the positive inflows for gold and negative for Bitcoin. And the takeaway seemed pretty obvious, right? As one Bloomberg strategist put it, gold is, for now, more interesting to institutional investors than Bitcoin. It looked like for the big players looking to play defense, gold was the winner. For now. But the story just changed. You know how it is in these crazy, volatile markets. The narrative can flip on a dime. And just when it looked like Bitcoin was getting left behind, well, the whole picture shifted. How much did it shift? Plus $239 million. That's how much money just poured back into Bitcoin ETFs. This wasn't just a small move. It completely broke a 5-day streak of money flowing out. It's a huge signal that buyers are jumping back in, maybe smelling a bargain. So what happens next? What does all this mean? We've got these conflicting signals just everywhere you look. You've got the shutdown anxiety, the weakening job market, and now this tug-of-war between gold and Bitcoin. So let's try to piece it all together and see how the broader market is reacting. And what we're seeing are the classic key market reactions when fear takes over. The VIX, the market's fear gauge, it spiked above 20. The big tech stocks, the ones that have been leading the charge, they're now leading the decline. And what's really weird is that even though the US dollar is getting weaker, which usually helps stocks, it's not calming anyone down this time. The usual rules just aren't applying. So let's recap the takeaways from the storm. Number 1, political gridlock. The shutdown is still the biggest cloud of uncertainty hanging over everything. 2, economic cracks. Those job numbers were a shock, and they signal a real potential slowdown. And 3, investor indecision. Money is just sloshing around, moving super fast between safe havens like gold and riskier bets like Bitcoin. Nobody seems to know where to park their cash. Which, of course, leaves us with the million-dollar question. In a market that's being pulled in two different directions, between fear and opportunity, which force is going to win out? We've got this massive tug-of-war going on, and honestly, what happens next is anybody's guess. If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. We've got more news in our Telegram channel, the link's in the first comment. See you next time.